Good evening, traders. Today is Friday, January 20th, 4:16 p.m. Markets are closed. I hope you guys didn't get run over by the stampede. Specifically the bulls. I'm sorry, the bears. The bears. Because anybody in the way today would have gotten trampled and crushed. As to what happened today, it was a wild one, but it was, well, at least in the bullish sense, it was foreseeable. Now, let's get into, today we're going to discuss the conditions that led up to it, and we're going to discuss intraday, that it actually honored the channel, I'll call them channel trend lines, channel regression lines, perfectly today. I also refer to those lines as being part of the matrix. I've had a question about that from a fellow subscriber. It's like, what in the heck is the matrix? Well, you're actually looking at part of it right now. You see these channel lines? I'll get into it a little bit. Okay? That's the matrix. It followed it to a T. Those lines are predetermined months to years ago. They are predetermined. And until this day, the market is respecting those lines, such as the 4/8 matrix line, which was determined in 2011. 12 years ago, guys. 12 years ago, this line was set. And look what happened this week. You bet it was honored. Every single one of these lines, these diagonal lines, that all start from the hive. This line down here, this is the starting line that gives birth to all other parallel lines above it. The path was predetermined, guys. Predetermined. And markets are absolutely 100, and I'm going to prove it to you in the next slide. This is a little bit too high level. You can't quite see where the markets are honoring it, except for today, actually. See, it's honoring this one. This is the first 1/4 line, and here's the second 1/4 line. Okay. So for you newer viewers, okay, what the heck are you talking about? This is the main line. This is the bottom channel. It goes back to October 13th. Perfectly. Here's the bottom. Here's the top. Okay. Here's the middle. That's the half line. That's the 1/2 line right here. And then I just divided the 1/2 line in half to give you a 1/4 line. And then I divided the 1/4 line in half to give you a 1/8 line. So the 1/4 line is black. The 1/8 line is blue. I just did that over and over and over again. And you're going to see in the coming slides. Oh man, it perfectly honored all the lines, including the EMAs and the SMAs. Okay? Without exception, without fail. That, my friends, is what I refer to as the matrix. I did a session, actually, over the weekend. It's this one. Check that out. Markets Master Plan. That talks about the matrix. That talks about the matrix. Lines from decades ago, 2002 even, are being honored today. Yes, that is a fact. Okay? So, basically all of this is just to kind of how the scorecard went for this week. Coming out of Tuesday, Memorial Martin Luther King on Monday, we were closed. Came out on Tuesday, I say, ooh, we are at resistance, guys. We are at resistance. Don't get your calls. Don't get your calls. Don't go long. Don't go long. What happened the next day? Wednesday, kaboom, head fake, big squeeze, big move down, big retracement that led to this episode. But the next day I say, you guys, SPY's bottoming. It is bottoming. MACD shows the notch right here, the notch. And what happens? SPY bottomed, leading to today. Trend change. Okay? I only want to say that None of these episodes included drawing trend lines at all. Okay? But yet, it was still predictive and precise. All right? Because I was looking at the matrix, not at trend lines. So, this is interesting. I just want to bring this up. Today was actually my first day of ever attempting to use the Ichimoku cloud, because a fellow Elliott wave chartist uses that. So I said, okay, I'll just give that a shot here. You know, this is like very amateur at best. Okay? Basically, the idea is if you close the week, just today, we closed today, above 395.29, then that is still bullish. The trend is still bullish. Okay? That's the idea. So you have to close the candle body above that cloud, above this cloud, which is 395.29. Okay? Well, how'd we do on that? Look at that right there. Here's today's close. Here's today's big green candle. Look at that. Boop. Above the cloud. Okay? It closed above the cloud. So, that's really all I can say about that. That's astonishing. It did what it had to do to close above this cloud. It started off way down here. I was like, it far exceeded my expectations. I was like, I don't think it's going to get there, but it sure did. Okay, so 395, by the way, is the weekly expected move. 395 exactly. The weekly lower end. The upper end was 405. Okay, 405. So there you have it. Okay, so this morning, I had this morning's episode laid out these levels, right? Just kind of keep in mind from now: 390.34, 391.33, 393.97. Okay, I just kind of want to call it out. I called out these. Again, these are numbers that I will call from the matrix. Okay, from the matrix. All right. So, zoom out. How did it do? Look at that. Every pivot point, every single pivot point today was either from a drawn out EMA, SMA, right, over here, or it was from, the next slide's a little bit better, one of those diagonal channel lines. Every single pivot point. This one doesn't quite have all the channel lines in it, but it shows you clearly that the levels that I drew out in the morning before market open, guys, perfectly honored. Look at that. Up. Every pivot point. Resistance. Resistance. Support. Support. Resistance. Resistance. Every single one was honored. That, my friends, is the matrix. Right there. 100%. 100% correlation. No need to draw a single trend line, guys. No need to draw a single trend line. Okay? Let's look at the... Okay, here we go. In fact... Okay, see, so here are the diagram. Remember the black line and the blue lines I was talking about? This is the 1/4 line. Here's this blue line is the 1/8 line. But this is the first 1/8 line down here. So this is 1/8, and that's 2/8. And up here would be 3/8, right? And accordingly, and so on and so forth. And here's the middle of the channel, that dash line. Okay? So, in fact, all of yesterday and all of overnight and pre-markets followed this 1/8 line perfectly. Perfectly. See that? You can't make this stuff up, guys. Perfectly. 100% correlation. So, this is the 5-minute chart. It passed this morning the 5-minute EMA 50. The one that I always harp on and said, you got to pass that back test. You got to pass that back test. That's what this big red candle was designed to do. I actually tweeted on that. I said, hey, yeah, look, see if it dumps down, to see if it intentionally to come from underneath the EMA 50 to backtest and go back up. And that's exactly what it did right there. Exactly what it did. Because it has to follow that convention to almost prove its legitimacy. It's like a Geneva Convention in war. You know how you have to follow certain ways of conducting war. You can't just go in there and just start thrashing people. You have to you have to do it a certain way. This is basically like a rules of engagement almost. Passing the back test on the 5-minute EMA is almost like a rules of engagement the market makers are almost bound to do, or they must prove it first. As was the case, they came right back to that 5-minute EMA to backtest it later on, right here. See that? Okay, so moving on. Look at this first pivot point. 30-minute EMA 50. Backtest up. Oh, found resistance on the 2/8. Right here's 1/8. Right here. 2/8 channel trend line. Right there. See that? You can't make this stuff up, guys. Then it came up and found resistance on the 4-hour EMA 50. Then it came and found up all kinds of resistance between the 1 hour and the 2 hour and the 2-hour EMA 50, the 2-hour SMA, right? It just found all kinds of stuff. And that's what I said in this morning's video. I said, oh, this area right here, I can see all kinds of resistance. So yeah, it chopped around here for a good, a couple hours maybe? Something like that. It was a long time. See, that's what I thought. This area, I was like, oh, this area, I'm not sure how it's going to get past this. That's when I sold my calls, honestly. I'm like, I'm not. I did not expect this whole up leg after this. I sold my calls here. I was like, I'm out. Right? So I got out too early, but well, okay, that's fine. I lost out on some money right up here. Obviously, I lost out. Opportunity cost lost there, but but I didn't lose money. So that matters more to me. I'd rather lose out on an opportunity than lose money. Okay, that's fine. That's cool. So okay, but so back to all this. Okay, so once it clears this, see that? Look at that. Look at this wick. Look at these wicks. Perfectly with the midline channel. The midline channel line. Look at that. Right there. Look at the wicks. Perfectly. Comes up here and finds some, at least respects, it respects the 4-hour SMA 20. See, because it backtested against it. So then it comes up here and, now it's, so now it found support. It found support against both the weekly EMA, the weekly expected move, the 80% line, which is 395, and the, what's that, the 3/8? Yeah, the 3/8 blue line. Look at that. And then boom, ended the day. See that? The entire path today was all laid out by the guardrails set forth from the EMA and SMA lines from different time frames, as you see here, and from the channel trend lines that were set months ago. See that? Yeah, it's just incredible. That, in a nutshell, is the matrix. That's the matrix. All these lines are invisible to the eye. You can't see them if you don't draw them out. See what I mean? You just kind of look at the market like, oh, well, it's kind of, yeah, it's moving up like this. But you have no idea why it's pivoting off certain points. See what I mean? All of these channel trend lines, as I said, are all of them are born from the hive bottom channel trend line. It starts at the hive and then it goes up from there. That's basically it. That's basically it. Okay? One significant observation here. Look at this. I was tweeting on this. I was earlier in the day when I started to see this kind of curve down. I was like, oh, here we go. It started to curve down. See, that is a lower high than this right here. This curve down here is. But then it started to curl back up. I was like, oh no. Okay, then that's not bearish anymore. It was bearish when it started to curl down. That's when I called it on Twitter earlier. I was like, oh, that's bearish. It's starting to curl down, creating a higher low hump from the original, that's bearish divergence. but then it curled back up and invalidated the bearish divergence by making a higher high. So now, at the end of today, you do not have bearish divergence on the MACD. That's crazy. That tells me Monday is not necessarily going to be a dump. You see what I mean? I don't know exactly what it's going to be, but it's not going to be a dump because you don't have bearish divergence heading into close. See what I mean? So, anyways, that's what I wanted to point out about this slide. This slide is very, very significant, right? Because it just shows every movement the markets made, actually yesterday and today. Every movement respected one of these lines, including, obviously, the intraday EMA 50 and SMA 20, right? It did. It respected it. The intraday, right here, the curvy lines. See what I mean? So, there you have it. Okay, now we're going to talk about where's SPY going next. You guys remember this that I did 13 days ago where I said, yeah, I think SPY is going to do 396 to 398 using that rudimentary method that I use of connecting the wicks. But I also gave you guys an example from fellow subscriber and Elliott Wave chartist, Yang Bai, and he also gave similar numbers. Actually, he gave 398 as one of the numbers to target from his Elliott Wave projections. You know, but my method is completely rudimentary compared to his, right? I'm just connecting dots, guys, like stuff you do in kindergarten, okay? Connecting dots, coloring inside the lines, right? So 13 days ago, got 396, 398 projected. That's exactly where we went to. So I want to share with you guys, what are we going to do now? Check this out. Same kindergarten rudimentary method, connecting the wicks. Remember, the descending side of the bullish MACD divergence. This is a bullish divergence from yesterday. This is price action going down. MACD was stayed flat. That's bullish, right? So we'll start connecting the wicks and look where they all go. Potential targets for next week: 401 to 403, 406, 411. Mind you, the weekly EMA 50, the one that has denied the markets in all of 2022, all of it, all of 2022, it has denied the markets. The weekly EMA 50 is at 400.47, guys. Ahaha. What does that mean? We're going to find out, aren't we? Okay. I'm just telling you general targets. I'm not telling you how and when or where. We're going to get there. But I'm just telling you it's going to be one of these numbers. One of these is right. I'll let you guys comment on what you think it is. That's cool. I don't have a strong opinion on any of these numbers, honestly. So you could tell me what number it is, and I will agree with you. Okay? So, there you have that. Let me know if you have any questions. But that's basically all I've got for you guys today. Please follow me on Twitter if you'd like some real-time updates, as I was doing today. Towards the last half of the day, I was just more like, man, guys, I don't know what to say. I didn't expect this to be that high. I expected it to be bullish, but not that bullish. Okay, so I was even taken off guard by the strength of this move. Okay, in fact, I was actually I was like, hey guys, I start to see some bearish divergence here on the MACD. Yeah, but then I said, oh, never mind. That just got invalidated because the MACD went higher. So there you have it. Okay. And please don't forget to listen to your favorite music as you're trading. As you're trading, it helps you get into the right state of mind, get into the right zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. And with that, I'm Agent 00 Woe, signing off. Everyone have a good weekend.